Check. There we go, gentlemen. We are live. I loved the last half hour preparation we've done for this call in the backstage, chaps. Really appreciate all of our time.
Some real nitty gritties going on.
A lot has gone into this.
First, before I come to our star guest, Mike, I can't hear any noise. You must have a new laptop.
Yeah, this is literally we treated ourselves. Both myself and Will have new laptops. The Dyson Hoover has gone. So, yeah, end of an era.
The audio is crisp. I cannot deny. So, as it says just below me, as people start to join, find out that we're live, the notifications start to hit Facebook, YouTube, and LinkedIn, where we are this evening. Monumental day, I guess, in some fashion, with the heights of 3% now as the Bank of England base rate, which we're going to touch on. A few people joining in saying hello. There's the wife, the good wife, in the other room with the girls. But yeah, we've got a star guest on for tonight, and timing was perfect. It's almost like we planned this, Dave.
Oh, yeah, you would have never thought, eh?
Yeah, we might know what we're doing. Who would have thought it? So how are you, first and foremost?
I'm okay, thank you. I'm actually really good, thanks, Ian. Yeah, positivity, all right.
We're going to touch on it in detail because it's been actually a relatively good week in all things considering. So yeah, we're going to touch on that more. But as people join, if you can hear us, we love a little thumbs up, pop us a like, let us know. And if you've got questions this evening for Will, for Mike, for me, of course, Dave, otherwise known as Uncle Dave, everyone's favourite mortgage advisor, then we would love...
Not shaking that, am I, mate? God.
No. In fact, I've got a special treat for you later on that. You're going to love it. Andy's saying happy birthday.
Who let the cat out of the bag?
Yeah. I can't believe you're 30 now. Congratulations, Dave. Congrats.
Thank you.
Chris is joining. He's saying hello as well. So yeah, pop us a like, pop us a comment. If you've got questions, obviously the base rate, let's get into the serious jazz. The base rate has gone up to 3% today. This week, we've done a bit of reporting around some drop in mortgage rates, which thank you for your information shared on that, Dave. And we're going to come straight to you in a sec. Will, I feel like I've left you out. Your hair is looking immaculate.
Are you sure?
Yeah. Very good. Today in the HQ, Will, we had one of the star video editors of the Avocado Group, and the debate was who is the best presenter out of all of the avocados. And you were tied in first place as one of the best presenters in the Avocado group. So congratulations on that title.
Thank you very much. Yeah, it was one of those ones when I was at school. A lot of people said, look, you look the part, you smell the part, you should be famous. So I said, okay, that's what I'll do.
That's a long way from playing as well.
Love it. Absolutely love it. But Dave, I'll come straight to you because that's what probably most people want to hear.
Yeah.
How's your day been?
It's been okay. You know, it's when we've had base rate changes leading up to now throughout this year, we have had phones ringing off the hook. Yeah, everybody wanting to know what's going to happen to their mortgage. But strangely, that hasn't really happened today. I think in general, there's been a sense of calm in the mortgage markets over the last week or two. And yes, don't get me wrong, we've had the odd person panicking here and there, but in general, it's been okay. We've had a good day. There's still people out there looking to secure new mortgages, get decision of principles, start the process, get the ball rolling. So yeah, it's all in all, it's been good, Ian. It's been good.
What's the expectations? Because one of the sort of positive trends, if you like, for the mortgage lenders out there, we've seen, I know Will and Mike reported on it, I reported on it, but mainly lenders have been dropping rates for the last, let's say, 7 working days. So that's been a really nice, positive sort of part of the week. We've seen a lot of opportunity for people to go and get 4-something interest rates again on their mortgages, haven't we?
Yeah, absolutely. The days of 4% were long behind us, and I didn't think we'd see them again for quite some time. But no, this week, a small part of the market nationwide for their existing customers only. So you've got you've got to have a mortgage with Nationwide and be looking to renew that. But they actually dropped by up to 1.3%. When was that? Tuesday. Certain people, not across the board, but that's the headline. And yeah, brilliant. It brings them down into sort of late fours, which is excellent news. I think you're right. Other banks have started to tweak their rates throughout the last couple of weeks as well. And that's a couple of things, in my opinion. The prediction for the base rate change wasn't as bad as we thought it would be a month ago. We were potentially thinking about a 1.25, maybe even a 1.5% hike. Obviously, that's just ended up at 0.75%. Banks predicted that, and they went for worst case scenario, increased rates probably 3 or 4 weeks ago, higher than we'd seen them ever before, and they've just started to bring them back down with a little bit more comfort and ease that the base rate wasn't going to jump to those really bad levels we predicted. And there's the volumes of business that we've spoken about so much. Banks are starting to quieten down with their workloads and thinking about getting a little bit more competitive, just dipping their toe in, trying to adjust their rates to get a bit more business. So all in all, it's good stuff.
Yeah, that's positive. I mean, I know you can't forecast it or predict it, but even with today, do you think more banks will be doing what Nationwide have done? Do you think they're going to kind of significantly change things and honor their existing clients, and then maybe we'll see some of that roll out to new business as well?
I like to think so. Nationwide are slightly different to others. They've always looked after their existing customers, maybe more so than other lenders. Being a building society and all of their members part of that group, they've kind of had their focus on looking after existing customers, and they've always been one of the best banks out there for that, and they've shown that this week. But I do think that's where the competition's going to start. So when banks are ready to start competing for business again, yes, I think they'll start with their existing customers, then potentially roll out to remortgages. At the moment, we're seeing mortgage prisoners in some cases where they simply can't remortgage and are going to have to go onto a very high rate. That's where the next, I think, load of support, round of help is going to be in people remortgaging from one lender to another. So it's the start of good things to come, I think.
Okay, sounds positive. Mike, what do you think overall? How are you finding things from residential sales? And we're all kind of, well, Dave's business is based in Crowthorne. You guys operate in Crowthorne. I live in Crowthorne. So, talking Crowthorne market, but in general, how are you finding things at the moment with sort of buyer activity and sales? Have you got more sold than for sale, or have you got more for sale than sold these days? That's going to you, Mike. Have we lost Mike? Well, that's going to you.
I literally didn't get a word of that because for some reason my connection's not is not great. If you want to ask Will if you can hear me,
Will, I'll let you take that question, bud.
Yeah. Okay. So the answer is we've got more sold than we've got for sale. Having said that, we have had 2 instructions this week already that we've done details for, and we have another 2 to take on tomorrow. So we're not necessarily seeing a slowdown in new business coming to the market. I think what's fair to say though is that we haven't been where we were 6 months to a year ago, right? 6 months ago, you put a house on, it doesn't matter where it is, you're going to get viewings. Viewing numbers, I think now, and Mike would agree, I think have slowed down slightly, which, as we'll come on to later, is more of an emphasis on getting the price right. We're seeing more across the board. This is not just generally, but in our area, more reavailables, things that have been sold for kind of 3-4 months. They're now coming back to market. A few more properties that are coming down in price, generally speaking. So, but touch wood, we've got good houses coming on. What we feel is honest and fair prices, and so far, I think in the last two or 3 weeks, we've sold three or 4 houses. So, that's going to be key, isn't it? When interest rates and things are up in the air, getting the prices right for us.
Yeah, totally agree. On prices, Dave, coming to you, because a bit of a random situation today, and very shrewd and very clever actually from this chat. But one of the avocado guys, Ryan Bloomfield, that I was talking to, had a client of his that did the mortgage application 3 weeks ago, and gambling on the fact that there's always the potential of a hiccup for a property that he really wanted, actually did 2 mortgage applications and therefore had 2 mortgage valuations, was buying the property that had an asking price of 600. There was a bit of a bidding war on it and he got it for just over 30k over. One surveyor downvalued it by 30 grand. One surveyor didn't downvalue it by 30 grand. And he's now proceeding obviously with the initial agreed price. But that was quite shrewd on his behalf, which I was quite happy about. But nonetheless, are you expecting, or have you seen many down valuations in the last month with things going on, or has it all been sort of fairly okay?
I can't say we've not seen them. Yes, they are happening. Some banks more so than others, strangely enough. It's almost like the lender has told their surveyors that be cautious. They've never let us know, but you don't know what goes on behind closed doors. So it is happening, but it's not enough to worry about. And I think probably, if you put it in percentage terms, only not even 5% more than we were seeing it previously to all the chaos in the markets. So yes, it's out there, but nothing that I would say is worrying us. I think, like you said there, Will, as long as the pricing is honest and correct in the first place, then the surveyors they tend to agree. So yeah, I'm not seeing anything to worry about, Ian, to be honest. It's there, but no more than normal.
Okay, no worries at all. We've got a comment here from Kelly, who's a client of ours that's looking for buy-to-lets, and she's kind of mentioned that she's wondering if there's anything new with regards to buy-to-let mortgages and deposits needed for these, any changes there. They've got their remortgage money sat in their accounts and they're kind of holding off buying properties due deposits and rates, and they're not quite sure whether to strike on the next buy-to-let purchase or purchases, or to hold fire. I guess I get her concerns because in the last 3 or 4 weeks, sort of everything's done a bit of that. But what would be your kind of advice for Kelly on that, Dave, at the moment? I know you haven't got a crystal ball. We won't hold you to it, although this is live and recorded. But
no, and it's a really good question, Kelly, as well, because the buy-to-let market has probably been one of the most upset markets and upsets parts of the mortgage market. The key points to get into buy-to-let market, a mortgage hasn't changed. You still need a 25% deposit minimum. You've got your income, you've got other factors to consider. But what has happened is the banks have changed their stress tests. So what the rental might have got you 3 months ago, as far as a mortgage is concerned, today is a lot less. So to bridge that gap, you might need more deposit. Let's just use some figures off the top of your head. £1,000 might have got you 150 grand mortgage 6 weeks, 8 weeks ago. Now £1,000 probably only going to get you 120, something like that. So yes, actually, if they're not going to lend you as much, you're going to need more deposit to bridge that gap. Now, banks recognise that. And going back to what I was saying a moment ago about being mortgage prisoners, that's a real problem for the buy-to-let market because they've got the same rent. They might have had the same rent for years, but they can't afford the same mortgage anymore. So they're working hard. The buy-to-let lenders are working hard to overcome that problem. I think this is where we're going to see some big improvements soon. I had Nationwide's representative in our office this week. He's obviously part of the Mortgage Works, really big buy-to-let lender in the UK. They are working hard on improving stress tests, finding ways around adjusting products to resolve this problem. Don't mind me banging on. One thing they have said, and some people love it, some people hate it, the stress tests are based on the bank's interest rate, so the fixed interest rate. Now they're thinking about pricing with higher fees to be able to afford to offer lower rates. So to get the lower rate, you get a better stress test, you get a bigger mortgage, but they have to factor that into their application fees. So, but you might say, oh, that mortgage has got a 3.5 grand fee. That doesn't sound good. But they're going to lend you 10 grand more than another bank would. So weigh it up.
Can you still add those to the loan, Dave, with the buy-to-let mortgages, or do you have to pay them up front?
again, you can add them to the loan. Different banks have different stances. Some won't let you take them over the affordability limit. So if they're saying the max you can get is 130, your fees have got to be within that once they're added. Others will let you go beyond. So yes, you can.
Good. Okay. Appreciate that. And hopefully that helps. We've got a couple of people checking in. We've got Rob saying hi. Rob, thanks for checking in. Mike is confirming that he can smell Will's lovely aroma from here. If you missed that, it was just the fact that Will has been highlighted as one of the top presenters in avocado, and he said it was made for him. Kelly has said thank you so much. Really appreciated as well. So if you want to talk to Dave afterwards, Kelly, then welcome to obviously do the intro and have a chat with him, because I'm sure he can help on the advice. Mike, can you hear us now?
Yeah, seems to have stabilised a little bit more now, so it's all good. It's all good, albeit
Mike is in the house. Mike, any questions for Dave, or any advice for people of Crowthorne, Sandhurst, Finch that are thinking of moving next year or between now and next year? Really, two-pronged question to you there, but you can go with both. It's up to you.
Yeah, obviously, Dave, you've covered quite a lot, which is always good, because I think there's so many questions out there at the moment, and people are sort of scratching their head. And I think, unfortunately, social media and the media sort of tell a different story every time you look at everything. And I think we come across that all the time. You know, went on a Val last night, and she was really confused about what was going on. Agents telling her one thing, media's telling her another thing, house isn't selling, like what's actually the truth. So quick question for you actually, Dave, in terms of buy to let mortgages, obviously there was a period this year where it was actually cheaper to get a buy to let mortgage than it was a residential when they were having that crossover period. Obviously they've caught up a bit now. What would your advice be to anyone that's got, let's say, a portfolio of 5 or 6 plus houses that is coming up for remortgage, let's say in the next year or so, and that is worried about potentially where that might leave them on their mortgage situation and payments?
It's a really good question, Mike. No doubt about it. They're going to feel the pinch. Remortgaging from a year to even 3 or 4 years ago to what they're going to get in the foreseeable future is going to be more expensive. But I don't think it needs to be as expensive as it is today. Like I just mentioned, I think the buy-to-let lenders are trying hard to find resolutions to the problems they're facing. They're regulated, they're governed very, very tightly, and they reacted in a way that just protected themselves. Now they're getting their heads around it. Now they're seeing the sense in what's happened in the markets. They're finding resolutions, and that will result in rates coming down, maybe higher fees, but I think it's also a way to get those stress tests sorted out. So remortgaging buy-to-lets is one of the hardest things. A, you've got to have the affordability, and B, you could be coming off of a 1 point something onto today a 5 point something. Hopefully that's going to start to ease a little bit in the coming weeks and months. It's not going to be instant, but I would say start of next year. Bide your time if you can. It's got to improve.
Yeah, I guess so. And I guess as well, because, rents have gone up and things like that. But I guess as well, people's situations, spoken to a landlord recently that their situation's changed, and actually, age becomes an issue sometimes with mortgages, especially when you've got buy-to-lets, and actually it's a case of, well, you're going to come to a crossroads, aren't you? You might have to sell it if the banks are saying, well, actually, no, we're not going to remortgage it for you. Sort of leaves you in a bit of a rock and a hard place.
Yeah, no, I agree. You've always got the product transfer options. Banks will potentially offer you a better deal than the SVR, but it probably isn't still going to be attractive compared to what you've been paying for the last few years. I mean, I would use my own buy-to-let as an example, but my tenant might be listening, so I'm not sure. But in real terms, a mortgage that might have cost you a couple £100 a month could well be £800 a month now, interest only. And that's a big problem. You can't increase rents by £600 overnight. So, yeah, they're working on it. Hopefully that side of the market's going to sort itself out. Am I that boring? He's gone to sleep on me.
No, his computer keeps freezing, I think.
So, you're back in the room now again. Sorry about that, chaps. It just went for a second.
Yeah.
And for anyone that's watching at the moment, I've kind of just put the graphic on there because Dave kindly is going to supply the avocado clients with a monthly mortgage update, and the most recent one is available for people to click into. Although he's just given us a really lengthy update on how things are at the moment, this will give you a little bit more background into what's going on. I'll put the blog in the comments. So you can get it if you're watching on Will and Mike's page. You can get it if you're on the landlord page or on any of the others as well. And yeah, if you're not in our system getting the regular updates, then please register, and you'll get not just Dave's update monthly, but you'll also get some of the really helpful tips and market chat conversations going on as well from all of the avocado group. And of course, if you're looking for a property, you can find one through that as well. So definitely subscribe, check that out. That is my last little plug of that element of things. Will, did you like that like that graphic, Dave? Especially for you with
Yeah,
Uncle
I look quite
Dave?
young there, mate. That's lovely. Thank you very much. I thought that was brilliant. I love what you've done there.
Very smart.
Do some amazing things in Photoshop, actually. Will, you've got some Rightmove data, I think, haven't you, that you pulled out that I think was released today. Are you able to share that with us on some of the points that Rightmove are talking about at the moment?
Yeah, I'll read some of this to you. So the housing market update for November 2022 was released today by Rightmove. And I'll summarise very quickly. It basically says that throughout October, we saw a return towards a more normal level of market activity following 2 exceptional years. In the face of today's interest rate rise, below are some stats to help reassure people that are basically in the market. So point number 1 says that there's still a strong desire to come to market. New listings in October 2022 were up 13% versus October 2021, although down slightly, -1%, on a more comparable October 2019, which is interesting. Point 2, they've said demand is now in line with the last normal market and still outweighs supply. So buyer demand is up. Buyer demand is 20% lower than we saw in the incredibly busy October 2021, but is still 4% higher than October 2019. And finally, they've also brought to our attention that pricing realistically now is more important than ever. The average asking price for October 2022, I just had something come up on my computer, was 8% higher than October 2021. But they're now starting to see a gap between asking price and the final sold price widen. So they've just sort of raised emphasis again that you've got to get those prices right in order to get them sold.
Interesting. Yeah, I mean, I think obviously you've got 2 portals in the UK that do supply these days some great data, actually. And one of them being Rightmove, which Will's just gone through. The other one is Zoopla. And I've got their one that came out 3 days ago here for people to have a look at. And Will, Mike, let me just take that banner down because poor old Dave was cut off there and we don't want to lose his face. So we've got Zoopla's here. Now Zoopla is saying current house price growth, this is based on 12-month rolling, is at 8.1%. I think, Mike, we might have seen that creep up to about 12% earlier in the year. Do you think it was around that sort of figure at one point?
Definitely say so. Yeah, absolutely. It was going bonkers, wasn't it? And then we just sort of couldn't keep up with it. But I think that was right at the peak. And then obviously it started to taper down again, as we've seen. So, yeah, it's definitely higher than that.
It'd be interesting in January, I think, Dave, when we get a full kind of 12-month window of what actually house prices are doing, because it's just a tale of 2 halves at the moment, really. It's hard to tell. But it's looking more likely to be around 6%, I would say, something like that, I think, for 2022. What's interesting there is, Will, I think you said Rightmove was reporting about 20-odd% down across buyer registrations or buyer activity.
Yeah, but buyer demand 20% lower than they saw in October 2021, according to Rightmove.
And we've got Zoopla here that says since the mini budget, interestingly, 33%, so a third drop. What Zoopla have highlighted here, and they've always got a little bit of an agenda behind their data, is this 48%. And if you can't read it, it says proportion of buyers using cash or small mortgages to buy homes. And because I read this earlier, because that's the sort of prepared guy that I like to be, I know that they've got a little graphic for it down here somewhere, which is this one. And if you can see that, hopefully you can, what you'll see is current home purchases, 30% are being purchased with cash. So they're obviously not impacted at all by base rate changes or mortgages at all. And the next one here, which is the darker purple, the 18%, is loan to values under 50%. And then we've got the lilac sort of colour, which is 22%, and their loan to values between 50 and 75. So you could argue that the best part of 3/4 of house purchases at the moment are sub 75% loan to value. This is across the UK. That's quite interesting though, Dave. I don't know whether you find that the case with your buyer statistics, but I found that quite interesting from Zoopla.
Yeah, absolutely. And I wonder if that's a reflection of people buying and selling, home movers, not being put off too much, but the first-time buyers, maybe are they sitting on the fence a little more than they previously did? Obviously, first-time buyers, they're generally speaking the ones with the smaller deposits. And I hate to say it, but they've probably got more to lose. You know, me and you sell a house, it's all relative, isn't it? Whereas that first-time buyer, they buy at the peak, they could risk losing out a little bit. So maybe that's something to do with it. But it's interesting stats.
Yeah. Well, what I found, and you probably know more than me in the area, but I found looking at family homes, 4-bed detached market, I feel like they're the ones that have actually been hit hardest on price corrections in the last kind of 2 months. And I don't know whether that was a case of summer months got out of control and now they've just corrected back to sort of in line with the rest. It doesn't actually feel like the first time buyer market is massively impacted. A 2-bed house, a small 3-bed seems more or less around where it was a couple of months ago, but some of the 4-beds more around 700, 725 seem to have dropped, you know, down to mid sixes quite quickly. I know Mike's nodding his head there, but is that what you're thinking, Will, as well?
Yeah, I mean, this is something that Mike and I discuss, regularly. I think you hit the nail on the head there. Obviously, the last couple of years have been, really, really busy. And actually, it came to a point where if you had a 4-bed detached with a fairly decent garden, you could pretty much predict what you wanted for it. And actually, people would pay for it. Now I think it's come to realization that actually people are taking a bit more notice in terms of what they're getting now for their money in terms of square foot, etc. So they're starting to be a little bit more cautious. Interestingly, I thought that the first time buyers would ultimately be a bit more cautious now, maybe sit on the fence, see what happens, certainly, wait till the end of this year, see what it's like next year. But I think, like you said, we put a 2-bed house on in Sandhurst a couple of weeks ago, and within a week we did 7 viewings on the Saturday. We had 2 offers on the table, and it was a great result for the seller. And that was kind of interesting because this was after the whole mortgage rates situation, after everything had been turned on its head. So actually, a good first time buyer house. I will say though that again, there were 3 valuations done, and actually mine was probably the most sensible, but we got the job done. So you've hit the nail on the head there in terms of what I think.
Yeah, that's going to be interesting to see how that pans out, especially going into January. But I think maybe, Dave, we might be impacted by how out of control rental prices have got. And by out of control, the demand is there. I mean, I spoke to Tristan today. We did the podcast for tomorrow on the Landlord Page podcast, and he's had 2 properties go live this week. Could have let it 20 times, let it over asking price. Had one landlord at 1950 that's had a hike in their mortgage rate because they were on a tracker. Basically said, I need another 400 quid, and got the 400 quid. And the tenant paid it because there was nothing better out there for them in terms of price. So from a rental point of view, if you're a tenant and a first-time buyer tenant, you're probably thinking, well, actually, I'm still absolutely quids in with these interest rates on mortgages.
I just wonder if first-time buyers have been, and well, I hear what you're saying. It's a really interesting and positive spin on things, but I just felt they might have been sitting on the fence whilst all the chaos was going on with the mortgages and everything else, and they're thinking, "Wow, rates are really high. Do I really need to, or can I stay at home with mum and dad for a bit?" But fingers crossed, now we've got that calmness in the markets, both property and mortgage. Yeah, they're gonna start looking again, and we see a bit more activity. I love the sound of that, definitely.
Yeah, interesting stuff. Will, you mentioned you got a couple of properties this week. What have you got? Anything you can let us know? Anything you can let the listeners and the watchers know about? Any little secret squirrels?
Well, we put 2 on the market yesterday, which are Mike's instructions. So I'll let him tell you about those. But we've got another 2 details that we're doing tomorrow. So one of which is actually Wokingham Town Centre, walking distance, like 10 minutes, end of terrace, great first time buyer purchase actually, and reasonable price. So that'll be coming on. So keep a lookout for that on our page. And we've actually got one coming up on my development in Crowthorne. 3-bedroom, mid-terraced house, 2 bathrooms. Yeah, these are always popular on this estate. So definitely keep your eyes peeled for that one.
Stephen, there is more than just Mike on this live call. That's great stuff. And you said there, Will, we're going to do the details. What an old school phrase, going to do the details, is. By that you mean a live video, B-roll, sexy music footage.
I forgot where I was for a second. Yeah,
he's so old school, you just can't break him away.
I still call them applicants.
Yeah, you do call them applicants. You're very right. Applicants and vendors.
Yeah.
Talking of vendors, what are the 2 listings, Mike, that you just put live? Let us know.
So just put a bungalow on in Sandhurst, so St John's Road. So that's walking distance of the high street. So it's literally like perfect downsize of territory. It's detached, 2 beds, manageable garden. It's ideal, nice and quiet. And then we've got a 3-bedroom house that's just come on in Sandhurst as well, just opposite Sandhurst School. So that'd be ideal family house, or first time buyer, whatever the case is kind of covers a lot of bases there. It's been extended, nice garden and things, and it's got potential to extend as well. So 2 real good houses. One obviously a house, one a bungalow, but 2 good properties that have just come to the market. 2, as Will said, tomorrow, and then we've got actually another 3-bedroom coming up in Sandhurst next week as well. So these are all the kind of stuff that is, generically speaking, bread and butter, the stuff that people are looking to move to. And again, as Will said, all coming on at realistic price. The next one next week is coming on at 400. That's a 3-bed with a garage, private garden, driveway parking. So we're trying to get the prices, and hopefully there you go. But 3 great listings.
Before we lost you there, Mike, you just jolted, but you came straight back.
This connection's no good.
And if anyone wants to find out more about those properties or register their interest, although this is a blog link through to Dave's article, to the right of that blog link, you will find the registration. So you can go straight into the system there and acknowledge your interest for those properties and speak to obviously Will and Mike. Dave, any advice for anyone else listening? I know you've given us some absolute pearls of wisdom there, and I appreciate your time this evening. I'll put you in contact with Kelly, who's definitely said that's going to be worthwhile. And obviously anyone else that's watching or listening that wants to speak to you, probably easier to I don't know, go on the website for AFP Wokingham, is it?
Absolutely, yeah. mortgagewokingham.co.uk. Jump on the website. All our contact details there on the Facebook page, the same. Love to help anybody that's got any questions, even if it's just to answer any questions you might have about the market, not necessarily even the mortgage application process, just to explain a bit more detail about where we are today. My opinion, any advice? I just think let's carry on as normal, because genuinely there's so much doom and gloom out there, but I'm not feeling it. I'm really not. I feel a sense of positivity, particularly in this week. There's some great positive changes to interest rates and some lenders come out with new policy and things. So don't panic, Mr. Mannering. It's going to be all right.
Yeah, I feel the same. I think we all feel quite quite positive, confident, and we've all been doing the game for long enough that we sort of understand the market goes ups, downs, and but more often than not, it's level. And I think we're somewhere around that probably normal version of a market. Stephen's enjoying it. He's loved the evening's chat. So thank you for joining us, Stephen. Thanks for your comments. Massively appreciate it. Gents, appreciate it as well. And if you're watching this and we're no longer live, thank you for watching it. You can still comment. We will answer those questions. If you want to talk to Dave, you can reach out, or you can ask us and we can put you in contact, or Will and Mike, obviously the stars of the show over in Crowthorne, Sandhurst and Finch, and doing bits all over Wokingham Town Centre as well. So chaps, have a lovely evening. Thank you again for joining us. We'll see you next Thursday, 6 o'clock.